Good afternoon, everyone. The great Bitcoin grab as we see nations and family offices managing 100 million or more, ETFs, and then sovereign wealth funds jumping in to grab Bitcoin at vast amounts. When will this result in a Bitcoin shortage, for a better term, not enough liquidity, and then the retail investor will jump in? Going to run through some numbers for you, possible timeline, but we are in a changing of Bitcoin from what it was, peer-to-peer payments, into now just a store of value, digital gold locked away in vaults, completely the opposite of what Bitcoin was meant to be. This is the change. This is the shift. The resetting of the economic world occurs when the stablecoin legislation passes and all the Bitcoins locked up by major players. So let's jump right into it. We've heard of the great taking. Well, this is the great Bitcoin grab. They go hand in hand as a financial reset is here and intensifying. And what's so interesting about it is Bitcoin, it was supposed to break us free with peer-to-peer payment systems outside traditional finance. And what's happening is it's all being consolidated and roped back into traditional finance so other securities can be issued against it. So where do we sit? Square one, I guess, trying to escape the system. Now this Bitcoin has become strictly a store of value. The payments, well, there's faster ways. And you can see the ISO 20022 tokens that are going to be the payment rails for all of the smaller transactions. So it seems that Bitcoin is now just a store of value, a digital vault, for a better term. And it's kind of hard to put it into perspective, but this is where it exists. Now, I want to go a little woo-woo. There's also another vibrational entity that exists in the same medium of insulated wires. It's a frequency in itself. So when we start to look at AI and quantum tunneling, and it's all in the same vein. This is where digitization of all assets will be housed in this. The concept between physical and digital is here. This changeover to a fully digital, everything tracked, traced, assigned a value with a smart contract is here. It's in its infancy, but it is here. And this is where our world's wealth will reside, inside insulated wires. Now Bitcoin, 21 million. There's still well over 1.5 million not mined yet. So the total amount that exists today versus what will be in 100 years, I mean, we're going to work with the numbers and the totals. So what really started me on this, and Phil up at Trade Genius, I went to a live training up there. No, I wasn't sleeping in the back of the room. This is just for you here. I did take notes. 21 announces 4,800 Bitcoin in a single transaction or a single tranche. And then Metaplanet bought 1,000. So I want to try to use more round numbers as we go through the millions and all these types of percentages. So you can scale it up from 1,000 to 5,000, or we can go from 1 million to 3 million. So I wanted to keep it really simple math. I know I'm going to do a little bit rounding up or a little bit rounding down. So that 1,000 from 1,004, 48, 12 up to 5,000. Keep it easy numbers for you to work with. But this is the number I wanted to start, 4,812. So my question going in after crunching some of the numbers was, could there be a time in the future where there's no Bitcoin available for purchase on exchanges due to buying from sovereign wealth funds, company offices, ETFs, public and private companies, along with nations, and then finally the general public? There's a well-known saying on Wall Street, sell in May and go away. This year, even the big players are echoing that sentiment. Bank of America and UBS are both urging caution, advising investors to sell the rally. Markets are still struggling to regain their footing. We've seen over 11 trillion in wealth erased from U.S. equities, and the broader economic outlook remains uncertain. Historically, periods like this have often led to increases in central bank intervention, which more often than not means more money printing and a weaker dollar. In uncertain environments, one asset has shown remarkable resilience over thousands of years. physical gold. And Goldman Sachs is projecting a possible rise to $4,000 an ounce by 2026. If you're looking for stability in turbulent times, owning physical gold can offer a level of diversification and protection that paper assets simply can't. Here's the next step. Call Monetary Gold at 1-888-570-2636. Ask how you can hold gold in a tax advantage IRA and what incentives they have today. Again, that's 1-888-570-2636. And tell them Adapt 2030 sent you. But we've already hit, 111,000 in the last day or so, and they're predicting, to whatever your number would be, depending on your analyst. So at this point, I'm going to say mostly, unless you're buying fractions of a full Bitcoin, it's far outside the range of most people now. I mean, yeah, if you're a wealthy individual, you can grab onto one for 100. But, moving forward, as this thing goes up to 120, 150, 250, half a mil or something, that is going to be out of the range of, I'm going to say, everybody. And at that point, owning an entire Bitcoin for an individual, unless you got it way back, is not going to be possible. So this is where it comes into just institutional players are going to be able to control this Bitcoin market moving forward. Again, the complete opposite of what it was for in the beginning. So this is the question that I want to pose through the entire presentation here. Is this going to come to fruition? So we're going to start with the float supply here of 1 million. Like I said, I want to keep it easy math. Now it will be around 3 million total, so we can scale up or down by a factor of 3. So we'll start with 1 to make it easy math to understand here. So previously, when 21 bought those 4,812 Bitcoin, so what percentage of that is 1 million? And we're looking at 0.48. And rough calculation, 1% of that, so 2, if you're going to double that, 1% of 1 million is 10,000. So then simply, if 100 companies bought 10,000 Bitcoin, or 200 companies bought 5,000 Bitcoin and put it in their treasuries, took it off the market, the supply is gone. That million, toast, gone. This is what's happening daily. Thousands, 17,000, 14,000 are being bought by the day. So simple numbers in math again. I want to look at the number of companies there are on the planet, publicly traded, and all of them are getting the message from Michael Saylor, get the Bitcoin in your treasury. Your valuation is going to rise based on the Bitcoin held. So right now there's 48,000 to 58,000 publicly traded companies listed on stock markets worldwide. And Bitcoin is worldwide. So every company is going to try to mimic this, at least in some fashion. Because if you're holding one Bitcoin now, an ultimate valuation goes to 13 million or 10 million, as they say, that's just going to be solid revenue that will not wane in your treasury of your company. So people are catching on to that. Even a couple, 5, 10, good enough. So keep that in mind, about 50,000 publicly traded companies. So if every company on the planet wanted to buy 4,800, just like 21 did, even at today's numbers, they would all be limited to 1/10 of a Bitcoin per company on the low end of 48,000. And if it was higher at 58,000, they would have 8/10 of a Bitcoin. If they all ran out today and wanted to purchase the same amount that 21 just bought. All right, you already look at, that's just companies. That's not countries, not sovereign wealth funds. So just keep this in mind. Even if 1/10 of a Bitcoin, that would not do much for companies. So once this sort of fever buying comes in, this greed and fear, coming into the ultra greed for companies at least, they're going to strip out the supply in short fashion. The reason I would say that is because it has to have some rules, legislation behind it. That's why this stablecoin bill is so incredibly important in America. The stablecoin bill will be the last step for the financial reset in America because they will digitize the dollars and be able to cross-swap those across the planet. They'll be backed by treasuries as well as gold. And what is the previous financial system will have shifted. But I do believe in tandem with that, this institutional buying will absolutely gobble up the rest of the Bitcoin. If it was going to have more laws for larger corporations to come in, because there has to be some base, whether SEC filings or whatever it is, there has to be some rules behind it. So here, blockchain-related mentions in SEC filings, Now, if it was not going to be mass adopted, that would be trailing off, but it keeps increasing, which gives you an indication that it's here to stay, and they're putting the base layers down for all investment firms to actually come on markets with this and offer it as a product, a financial product for anybody in their 401ks. Again, it's going to be come down. What if they can allocate 1 to 2% of Bitcoin for all the companies? That's going to outstrip the supply in a second here. So the world's top 10 holders of Bitcoin, put it in perspective. Binance, that's an exchange. Grayscale, 600 and some thousand. U.S. government, 207,000, but they're going to supposedly accrue another 800,000. That's just one country. Now Mt. Gox, that's a gray area there still. Bitfinex, an exchange, Chinese government. 194, again, hard to know, prove that number because details are sketchy, even their gold holdings. Gold holdings are somewhere around 35,000 tons in China. They're saying publicly way lower than that. MicroStrategy rebranded as Strategy. This is a way old number. They're up above 500,000 now, or right around that. Block One, then Robinhood, obviously an exchange. So what you're looking at is exchanges have to hold Bitcoin too to operate. ETFs need to hold Bitcoin to operate. So financial products from these, large entities have to hold it to even do business in it. Like gold ETF, you have to have the gold. Silver ETF, you have to have the physical gold or the physical silver. Well, you need to have a wallet address that shows how much BTC is in there. They have to have a minimum amount to operate. And the more they have, the more they can offer as financialized products. So they're trying not to spook the market by running in all at the same time. And we'll go into how they're getting around that. And then the treasuries of public companies here. This is a big one. I showed you that list. There's 48,000 companies. We'll say 50 because it'll split the middle between those two. But these are all the ones that are specifically into cryptocurrencies, mining, this sort of thing across the planet. Depends on the country there. You can look at it. And the amount of Bitcoins here, 500,000 at Strategy, Marathon. But you can see the companies now, even look at that, multiple thousand, 3,000, 2,000, 5,000, 8,000. Once every company goes to this, we're going to start to see the liquid supply whoosh, vanish. So sovereign wealth funds, this is a nation's building. Like we're supposed to have a sovereign wealth fund of Bitcoin in America starting, supposedly. But if we look around the world currently, there's between 90 and 176. The numbers are sketchy, and I wonder why. You'd think it'd be so clean and to understand how many sovereign wealth funds there are. PMC study 2023 says 176, over 12 trillion in assets. And we're talking about $100,000 Bitcoin. So 12 trillion out there, and Newsweek says there's 90. So, it'll lie between those two. Okay, that's a lot of money that could march into something else. As we look at these next couple charts, understand that these are standard charts, but you're going to see that the names are also different in each chart of which country is controlling how much wealth. Now, Norway, unbelievable here at 1.74 trillion. They're also mining Bitcoin using hydroelectric, but if they get into the buying game, that much money right there, that could take an enormous amount offline. Then we got China, too, in China. You got the UAE, Kuwait, Saudi Arabia, Singapore, Indo, Qatar, and Hong Kong. But then if you look at this next list compiled here, Abu Dhabi, Kuwait, Singapore in a couple locations, Alaska Permanent Fund, that's even one that's state. Got Libya and Brunei as well, South Korea, Malaysia, Kazakhstan. And they got multi-billions in assets as well. Now, Africa is one I'm really interested in because the amount of investment money going into Africa and the amount of money they have because of new trade deals with their raw commodities is going to push this up incredibly high, and they're going to need to park their money somewhere. And they're not going to be doing it in treasury bills, unfortunately. So if we look at the fund, you got Libya, Ethiopia, Botswana, Nigeria, Egypt, Angola, Morocco, Ghana, and Senegal. Senegal, smaller country, but still has 1.23 billion. Even 5% of that allocated to Bitcoin. If every one of them just even put 5% of their wealth fund in there, you're looking at substantial price rises. And Middle East, North Africa, MENA, it's going to jump from where you see in 2025 of state-owned investment going into this from 7.7 trillion up to 11 trillion in just the next couple of years. So the amount of money going in here is going to need to be put somewhere that's going to grow its capital. Now, be an African wealth fund manager. Where would you put the money? Sure, gold, but what if you're a gold producer? Okay, you have some for reserves. You're not going to sell. Okay, you're going to buy more gold and bring it in? Possible. More silver? Sure. Investment projects for pipelines and roads and railway? Sure. But then you're going to have extra. Where are you going to put the money? Be a sovereign wealth manager for an African nation with trillions coming in, hundreds of millions, billions. What would you do? So these are what I call the megalodons here. These are the biggest ones on the planet. So you can look at just an overview of the largest. Even Abu Dhabi at 649 billion. And you look at both of the Chinese there, that's 1.7 trillion. And then, Norway, 1.3 trillion. Hong Kong, 580 billion. You start to add all these together, and that's an enormous amount of capital to flow into the cryptocurrency market if they choose to. And now let's jump into nations for a second. So a country itself doesn't have to be the sovereign wealth fund. A country can buy, it's splitting the hair, I know, but walk with me here. There's 195 recognized countries, including the Vatican. And Bitcoin held by governments. Again, these two lists are a little different, but there's some that are added on the next chart. We see U.S., China, the U.K., El Salvador, Ukraine, and Germany was zero. They sold all their Bitcoin. I can't believe it. Like, you look back in hindsight and see some of the most bonehead moves in financial history. Germany, that's one of them. How would you say? And you lost billions and billions just on the gains of what you sold it. So Bitcoin holdings by country, and you'll start to see other ones like Georgia, Republic of Georgia, and Bhutan is also, Finland's on there too. Venezuela's got some. So, and it's death by 1,000 cuts. And what if we suddenly scale it up and like 250 for Venezuela, and then every country on the world, like almost 200 countries, buying 250, then it becomes a lot more. And 250 is really nothing for a country. That's just literally peanuts. That's a rounding error for most budgets for countries across the planet. All right, so family offices. Not a lot of people talk about Raul Paul. Thank you for pointing me over to the family offices. That was another one I hadn't considered. So Real Vision, dealing with a lot of family offices, pointing me over this direction here. So there's 3,000 to 5,000 family offices, and they control over 100 million US dollars per office. So do the math. 3 to 5, we'll cut it in half, and we'll take the average 4,000. And then again, ultra high worth. Where are they going to park their money? I mean, even the gold allocations, I've seen some of these, pie charts for allocations. They're like 1% gold. Everything else is in, real estate and equities. Do you think they're going to start to swoop up some Bitcoin? I think they would too. Even if it's 1% Bitcoin on that, 4,000 times 100 million times 1%. Then we get into some massive numbers, and then, everywhere you go. Now we got ETFs, family offices, sovereign wealth funds, countries. And we have to look at truly how many available Bitcoin are there. But first we need to know company ownership globally. It's just an estimate. It's always changing, and this is probably changed since yesterday again. So we know public companies so far on the record have to list how many BTC they own. That's around 738,000. Private companies, 398. Crypto mining companies, around 100,000. And then the big one is the ETFs, etc., and they're right around 1,000,001. So if you squeeze all that together, you get 2.3 million Bitcoin owned by the corporations and these larger entities right now. And as of the circulating supply, if you were to do straight math at 21 million, but those other 1.5 million coins haven't been mined yet. So we're really lower. And there's a lot of lost and inactive wallets that they're never going to find the keys. It's just going to be lost in a land dump somewhere. So you take those offline. So the circulating supply, if you're just going to do 21 million, 11%-ish. But really, once you do what's available at 19.7 million, around 11.82 or almost 12%. It's already locked up of the entire supply. And that's before it really gets institutional adoption and stablecoin legislation. And once that does, whoosh, you're going to watch it run. Because once the stablecoins are legislated as solid money allowed to transact with transparency and rules and regulation and oversight and all those keywords they love to use, the issuance of those is going to flood the market, and that's where the liquidity comes from. All right, and you're going to watch a huge amount of buying occur at that point. So right now, 12% is locked up. I do want to split the hair here. I want to go into the gray area, and I might even do different shades of gray. Because we got the circulating supply and we got the liquid supply. And depending on the lost wallets, how many are mined so far, this is where the rubber meets the road on this one. So a little texty, but I'll walk you through it. For those of you that like numbers, this is your slide right here. So total government holdings of Bitcoin currently are about 2.4 to 2.7% of all the actual supply circulating. And if we look at global totals of non-individuals, that means, companies, ETFs, sovereign wealth funds, there are 2.8 in total. So if we start to add in what the countries own and what globally everything owns just beside companies, now you get to see we've got to throw in the sovereign wealth funds now. Now we're starting to get into some bigger numbers. It becomes almost 15% of the total supply is already locked up. Never going to move again. They have to have it to operate. Those that are going to buy it for investment, they're not going to sell it. I would ask you, at what point would you sell your Bitcoin? 200,000, 500,000, 1 million. I mean, obviously people are going to cash out at different price points. A one Bitcoin at $1 million, would you sell it all now? No. I might sell 10% of it, hold on to the rest, use that to live, probably go to some vacation destination, live the rest of my life on a holiday, Why would you not do that? And then cash out what you need. Oh, I need more money. Okay, we'll sell another 10th. 2 years from now, it'll be worth 4 times more. Like, nobody's going to really sell one whole Bitcoin at a time. You wouldn't need to, especially at a valuation over $1 million. Like, why would you do that? Plus, with all these lending protocols coming in, they're going to be government sponsored. This is the whole thing. Everybody got burnt on the lending protocols, from BitConnect to Celsius and everything in between, FTX and shit. There's been so many mountains. Once they get the legislation in where you can actually pledge your BTC on some sort of protocol, you could earn interest on that. But you're going to be, track traced and, KYC and have to pay tax. But you'll be able to earn percentages on that. Let's say 3 to 4% per year, and it's at $1 million. Could you live off of that money? Maybe. The diversification of all these different crypto assets right now that you can stake for different percentages. Solana's different. Wherever you look, there's some different lending protocols that you can earn on. Even just like stable coins, I think they're offering 3%. There needs to be solid legislation so nobody gets burned like the previous list that's getting longer by the day that people had their money into. So 15% is totally locked up. Now, if you want to go to bitcointreasuries.net, this is an awesome site here. Thank you for whoever's putting this one together. And it shows you on the far right, you see that white square there, private company holdings, government holdings, DeFi, which is where you lock in, again, DeFi platforms, they're not regulated. They could just disappear in a day and all your savings in Bitcoin or whatever you pledged in there is gone. And then we got public companies, exchange custodians, ETFs. And, I only did this chart like 3 days ago to pull this, and it's already went from 102 to 111,000. So, and in addition, this will give you a better total calculation. And there it is, bitcointreasuries.net. You can do your own research, and I encourage you to. So case study strategy. As of May 12th, they own 568,000 Bitcoin. And if you do the math again, I want to really split the hair on this. The actual calculation of Bitcoin is approximately 19.7 million. Total supply minus coins that are lost, locked, or otherwise not in circulation, minus what has not been mined yet. So we're going to come down to 19.7, and currently one company owns 2.89% of all the Bitcoin circulating supply, almost 3%. One company. So this is, if there's 50,000 companies, if they start getting into the buying, this liquidity is just going to poof. And here's BlackRock, 567,000 Bitcoin. They own 2.7% of the total circulating supply. So put this in perspective. These two companies own 5.59% of all the Bitcoin that is out there. Now that's going into their coffers. Now would they sell any emergency strategy, something, they get whatever? Yes, they'll probably sell some out. But in terms of being able to offer on ETFs and different financialized products, BlackRock, for example, they're not going to let it back in the market. They need it for operations themselves. So the more financialized products they offer off of this derivatized BTC, ETF, whatever, why would you pay fees to own that when you could just buy the Bitcoin yourself? I don't know. See, again, like these financialized products, the only reason they're doing it is because you have to be approved on a market for a lot of these 401ks and IRAs to be able to purchase that and hold it. Bitcoin is not approved for IRA and 401k at this moment, but it is approved through a BlackRock ETF to hold Bitcoin. But you're paying the percentages. Skip that. Sorry, BlackRock. It's just sound business advice for most people. So the top Bitcoin holders in the world, minus Coinbase Prime, it seems to match similarly with other numbers. So I'm just showing you that these numbers are available. You can find them. They do match across different variances. And, the CME offering its mini and full contract, not physical delivery, but cash settlement. These products are coming out, but they need it to provide those other financialized services. So big money, Bitcoin moves 5 companies, $3 billion. So just this alone, and BlackRock's not even on here, just strategy 21. That's the very first chart I showed, is 4,821 Bitcoin. That is the XXI, the old Roman numerals. So you start to see just 5 companies can control a huge amount of the Bitcoin. Now put in 50,000 companies and all the other players that are in there, and you start to see, well, this could wind up pretty quick. So the BTC under management by investment vehicles, this is my newest one here on May 20th, 1.433 million Bitcoin. And that's slightly higher than it was in January of 2025. You can see that dip there, so they did sell some back in, but not very much, and then they swooped it back up. So, they're traders as well. They're going to let some go if they see some sort of indicators that the market's going to crash. They must have known that it was going to crash, and they could buy it back up on the cheap. So you see where they sold at the top there. And Bitcoin surpassed Amazon to be the 5th largest asset in the world by market cap. I didn't know if you knew that, but it is going to continue upward. And it will be eventually the largest asset in the world, hands down, bar none. That's the direction it's going. And once it's there and controlled by these entities, the price is they're really going to run the price up then. And that will be the new financial system, fully capitalized. Where'd all the money come from? It's not just old treasuries and hyperinflated fiat. It's new Bitcoin standard, along with the new stablecoin standard. Digitized assets with real-world assets like gold in the ground, gold here in the vault, whatever. They're going to digitize it. So you're going to get a whole new base layer of assets that have something behind it on the blockchain that's issued out as some sort of token, smart contract. And this is the new system we're looking at being developed right here, right now. What happens to the old money and the old debt? No, I'm not sure. But this is what is evolving to replace that. So looking at the liquidity, and I found this interesting video which has now disappeared off of YouTube. I'm glad I got the transcript and ripped it down and was able to look through that. So this video, if you can find it, it was called Michael Saylor, BlackRock's Secret Bitcoin Plan to Control the Market. Now that is not on YouTube any longer. It has been scrubbed off there. And I tried to find, I spent since I have a YouTube channel, I'm pretty versed in getting into YouTube and looking for things by date, popularity, I couldn't find it again. So the whole crux of it was, how can these big entities buy the Bitcoin without inflating the price? Because it's counterintuitive. You think that when they get into mass adoption, mass buying, that they would run the price up just from so much demand, but it's not like that. cleanly explained here. They're using TWAP and VWAP algorithms for Bitcoin acquisition discreetly. So Seth Finn describes the method also where MicroStrategy and BlackRock would accumulate Bitcoin without significantly moving the market using time-weighted average price and volume-weighted average price algorithms. So how does it work? And you can see through the illusion once you know how it works. So TWAP, or the time, divides large buy orders into smaller chunks executed over a certain set time period, days, weeks, months, across multiple exchanges. This minimizes market impact by spreading the purchase so you can avoid that price rise. And then if we get into the volume, you execute more buys when the volume's high to kind of disguise yourself into the market activity and reduce visibility. So certain times of the day are more, let's say, liquid than other times of the day. And then you're going to spread it across different time zones across the planet in different exchanges. So there's algorithms built in to do just this. They don't want to push the price on themselves. Why would they're incrementally buying at the high times in different exchanges across. So you can see how this, it's almost like a shell game moving. So let's do an example here. So BlackRock wants to buy 10,000 Bitcoin. They're not going to rock in and buy 10,000 because that'll spike the price at one time. Using the time algorithm, they would spread it over 30 days, buying 333 Bitcoin a day, but then they would use the time allocation for the perfect timing when market is very high with volume, and then they're going to split it over 5 or 6 exchanges, so you won't even see that. So really, they're only buying tranches of something like 50 because you won't see the full 333 because it's spread over 5 exchanges at different times. So they might even cut that to 25, 15 Bitcoins at different times, you know. So they're going to swoop it in different times, different look at, and then it all equal that for the day. They're very smart. They don't want to really push the price. And then they got over-the-counter OTC desks to handle 50% or half of those public order books filled off sheet, you know, or off exchange, so it won't drive the price. Here's the problem they're running into. Over-the-counter desks and exchanges, they must have sufficient Bitcoin supply, meaning they need more Bitcoin to operate too. So the exchanges can't operate without having a surplus Bitcoin in it. So now we start to get into, you see where this is, okay, they need more to operate. These guys, BlackRock, they need more to operate, but the exchanges need more to operate. Everybody needs more to operate in their daily workings of their companies to offer these products. So now just even base business requires Bitcoin. And here's another thing that it will come. I don't have a time for you, but institutional demand, nation state adoption. Once countries start talking about pulling it in, you're going to start to see a lot of individuals start to run, and then, you know, all that money of all the people looking to maybe, I don't know, get away from a failing currency. If nations and central banks start to really buy this like they do gold, we heard a lot about gold in the last, year or two about central banks hoarding, buying, purchasing vast amounts of gold. What if we start hearing the same thing with Bitcoin? Well, people are going to get on and be like, wow, we need some BTC. Also, reserve asset. Distrust in fiat, that's already here. You don't have to convince anybody that things cost more through inflation, where Bitcoin is deflationary. That's what we want, a deflationary stable asset. Now, will it go to zero order book depth? If it does, with no bid, no ask, then you can ask you can ask whatever you want, because people will pay the premium. So let's say it's at $1 million and somebody wants it, and you said, hey, I have it. I know market or somewhere around established market is $1 million, but I'll give it to you for $1.2 million. Somebody's going to hit that. $1.3 million, somebody's probably going to hit it because they need it. And for them, at that little overage of 200,000 or 300,000 at that point, they're looking long game at 13 million, 10 million. So to spend an extra 200,000 to get an asset that's going to increase by another 8 million and possibly more is a no-brainer. Yeah, they'll hit it. They'll hit it. As long as it's there to buy, they're going to fill it at any price. At least it was explained to me by a couple guys that are like way understand the markets better than me. Have been in there 30 years. When something gets that scarce, people are going to get it at any price because having it is more valuable than the money, which can be recreated, or look at like these companies, BlackRock with their algorithms. You think money means anything? Not a chance. It's about owning the asset. More money can be literally printed out of thin air. So the dollar figure means nothing. It's about owning that unownable asset. So the supply dynamics for Bitcoin here, this is where it really does get gray. The 21 million everybody touts is not really 21 million yet, and never will be, because the circulating supply is different. The mined supply so far, 19.7 million, it's going to take another 100 and what, 45 or 50 years, 150 years to get the entire supply out there. We're talking like multi-generations from now before it even completes its cycle. Now, the lost and inaccessible wallets, lost keys, owners who've deceased and they didn't pass that information on, they're never going to unlock we'll never find it. They're never going to move again. They're locked forever. 3 to 4 million BTC. So now let's subtract that, and we're really looking at about 14, 15 million BTC illiquid, meaning that people are holding it. They're not going to move it onto exchanges. Keys are lost forever. They're never going to be found again. If you're holding it, are you selling right now with all the information? I don't think so. So they call this illiquid. Not forever gone. The lost keys are forever gone. So please keep that in mind. Illiquidity means that it's not available right now, but it will be at a certain price point. But for right now, it's not on the market. So we're really only left with what? 19.7 minus 15, just a squeak over to 2.7 million, something like this. So here's a chart for you. The illiquid supply keeps growing. The higher the price goes, the less people want to sell it. All right, so this thing is going to scream over 110, and it has already. It's probably going to, hit 120, 130 before it bounces back here. Especially look at the M2 money supply global and see what the metrics are on the 107-day lag, I think it is, something like that, 12-week lag. So we'll say 80% of the Bitcoin supply is illiquid at this time. And let's use 14 million for clarity, second sentence there. So that'll leave us total, like I said, 2.7 million as a liquid supply. I mean, available on exchanges, trading in wallets, ready to sell, ready to buy. So that's 2.7 million total that's available. Now again, illiquid doesn't mean unavailable forever, except those who have deceased or can't find their wallet keys, and those, 3 million, too bad. But they're unlikely to sell in the short term. Not unavailable forever, unavailable at this price. Unavailable at this price. You run that to 1 million, I guarantee there's going to be more liquidity out there. And again, 5 million, of course there's going to be more liquidity. Once it gets around 10 million, though, it's going to lock. And people are going to realize the value of having such a thing, and you're talking about dynastic wealth at that point. Provided the sun doesn't throw a solar flare at us and somehow we can keep nodes up and running on the opposite side of the planet where something were to hit us. Beyond that kind of, 16 sigma event of some sort of massive, beyond Carrington event. But crunching a few more numbers and using some AI to help me with the math, May 2025 is closer to 2.7 to 3 million. Good enough now to keep the markets moving until it isn't. And again, this is the inverse here. So low-end illiquid means higher supply, and high-end illiquid means lower supply. So if we use the numbers back and forth here, the 2.9 million, okay, that will be brought down to somewhere around 1 million, and then what happens when it does? Then we get into this strangeness, and it's already begun. You can see clearly it's already beginning. Ethereum's ratio of coins at an all-time low. Bitcoin ratio on exchanges and available is at the lowest since 2018. So you can already see the dry up beginning in real time. Here's the charts for you. So people are starting to squirrel it away, for a better term. Now this 2.7 to 3 million is going to be slowly bought in, and it could disappear incredibly quick. Look, institutional buyers, if they just bought 1 million BTC over the next 12 to 18 months, and then nations buy 500,000, public, like people just buy and put it into cold storage on a wallet there, and then miners, if they want to hold it instead of taking their Bitcoin to market, 200,000. If they remove 2.2 million out of that, then we're only at 500,000 to 1 million Bitcoin on a liquid supply before the next halving. And then after the next halving, it cuts in half again. So the amount of available Bitcoin would be tremendously reduced. So if entities and nations collectively buy up 2 million Bitcoin, that would have profound effects on the market dynamics, price, liquidity, and broader adoption, because everybody will believe it's real because there's scarcity in it. And the current liquid supply, again, 2.7 to 3, and that's our max. Now we're going to get into this feedback loop. So a nation state's buying it, the viability of a reserve asset, and then corporations will buy, and then retail will pile in, and then unstable economies, which will be more and more as we shift into the new economy. People are going to jump into that too in countries to preserve wealth as the fiat and hyperinflates away. So somewhere in the middle, we're going to get this hyperinflating Bitcoin pricing, crypto pricing until it isn't. And it'll stabilize back into something more solid with, like I say, real world asset issuance against the stable coins that are coming out. And after the hyperinflation, think about Weimar Germany. Think about Zimbabwe. It went up in it, and then finally it came back down. But still highly inflated, even though they did the gold zig. They still couldn't keep it under control over down in Zimbabwe, even issuing their bonds against gold. They still ran away. But Germany went up, and then it came down. So, when you get in the hyperinflation phase through history, Lynette Zhang talks about this a lot. About 4 months, once it gets that apex peak, if you're going to cash out, that's the time to do it, because it'll be at that particular time. You can pay off everything. So talking about how much Bitcoin, see, moving forward, so that was what I'm talking about right now with metrics. But moving into the future, it gets even a little tighter. So Bitcoin blocks mined approximately every 10 minutes, and there's 144 blocks per day, times 24 hours, times 60, divided by 10 minutes per block. And we get about 3.125 Bitcoin per block, or about 450 per day. Currently 2025. But after the next halving, that will cut to 225 per day. And you can see then, if they're struggling and all the adoption's happening now, if you were a company, would you try to jump in now at lower prices, more availability, or would you wait until after 2028 when it's probably near $1 million, and then there's only going to be 225 a day? And then with 2032, there's only 112 and a half per day. So the further we go along, the less there's going to be per day. And that could be 112. That could be gobbled up by anybody in a day. Like one company will gobble that up and there'll be no supply. So you can start to see as we move forward. So you do your own analysis. Where is this overlap going to occur? So the final question here. Will companies, countries, sovereign wealth funds, and family offices purchase more than 450 Bitcoin a day until 2028? That's the question. And then I guess a second question, after 2028, will companies, countries, and sovereign wealth funds, family offices purchase more than 225 Bitcoin a day combined across the planet? Across the planet. So back to some simple math. 1,000 times 1,000 is 1,000,000. So we have 1,000 times 3,000, that's 3 million. Let's do the math. So 3,000 a day is approximately brings us to the 3 million over 1,000 days, which is, 365 days, about 3 years. So we just went through the last halving. So you're looking out until 2028. So 3 years, about 1,000 days, 3,000 BTC a day out there to strip that entire supply out before the next halving comes, which will reduce supply further. If this sticks as it is, they're well above the 450 Bitcoin per day. This is current purchasing as of May 2025. So on the corporate side, they're purchasing between 2,000 and 3,000 per day. Sovereign wealth funds, between 50 and 100. Again, these are ranges. It's not exact. And then countries are pulling in 100 to 200 a day, and a lot more countries that were not on those previous lists are coming up, and they got 2 Bitcoin, 5 Bitcoin, 10 Bitcoin. Family offices, 30 to 50. I think that would increase, especially if you have 100 million laying around and you want to dive into something else. So the total currently is between 2,240 and 3,410 Bitcoin per day. So again, I'll ask you the question, how long can this last before the Bitcoin supply gets incredibly tight? There's got to be some inverse relationship here where the price has to skyrocket to like stratospheric levels before people start letting it go on the individual side. But remember, individuals hold more Bitcoin than anybody else. Individuals hold 14 million approximately. So as you look out there, you have to shake them free with pricing. And at what price point would an individual let it go? And again, would that be some sort of lending platform as well where you put your Bitcoin into it and you get interest back the same way that you would do in any Wall Street product? So just food for thought here. Spot Bitcoin ETFs bought 26,000 Bitcoin in May so far, while miners only minted 7,200. That's just in May, so you get a good gauge and indication on what it is. And then Bitcoin Suisse greenlights Abu Dhabi marketing expansion. So you can start to see it's going across the Middle East, sovereign wealth funds. And that's interesting because Credit Suisse is normally the one, not Bitcoin Suisse. So the supply dynamics, again, I'm just running through the last numbers here with you. Until 2028, the current supply of 2.7 to 3 million can absorb about 2,200 to 3,400 a day. That's about 1.2 million per year. Low end, 820,000. So there's still liquid supply out here. That's why the bubble of water splashing behind on the slide. Over 3 years, though, that's going to run into 3.74 million. That's more than the available supply on the high end. So that will bring us under this magic scenario of under 1 million where incredible premiums begin on that, or zero bids, zero ask on exchanges, where even just Satoshis come up for sale, whoosh, they're snapped in through algorithm, because those percentages of a Bitcoin, whether it's just minimal Satoshis or a tenth of a Bitcoin, half a Bitcoin, those market algorithms are going to outrun you like literally tens of thousands of times faster on exchange trades. So they'll swoop it up before you can even like really press the button. At that point, if it comes to market, it'll be gone lightning fast. So after the 28 halving, remember, there's going to be 225 Bitcoin, not 450. As was explained to me, Hal, shout out, I ran this by somebody who is a trader, a friend of mine, Hal, and he cleanly explained it. Once corporate and private entities have captured a substantial portion of the liquid supply, then they gain control of the price. That's when they're likely going to run it up much higher than 100K. But again, I would ask, when they get to that point, combined effectively 50%, 51% of the network, would they fork it? Would they do something different with it? So think about all the corporate entities come together as a behemoth at 51% and say, you know what? These individuals that have been holding it for all, they're not going to have anything. Let's fork a new coin, and any miners will ditch that last coin, including all the coins that everybody owned. And perhaps they could put some special new protocol in there where forked coins, those that were holding the original Bitcoin, won't get the fork. Hey, wouldn't put it past me for them to write something in like that, especially if it's corporate. So at what point does it dominate and control 51% of the market and all players come together? A question. It's a valid question. It's happened. This 51% attack has happened so many times in the past. And again, rather than being used as a vehicle to exchange value, it will instead be morphed into an asset stored for investment speculative purposes from which they can then issue secondary securities. I say securities because their appeal will be for the gain of profit, not the original purpose of Bitcoin. We see this every time through history. When something comes that could be used for the masses to improve their lives, it is absolutely swooped, taken off, and put on the shelf. Think about how many magnetic motors, the Preparedness magnetic motor, for example, was going to go into mass adoption, mass production. Oh, that's free electricity. Can't have that for the peons. Every time we look, how about electric gravitics? And we wouldn't have need to build the roads. waitlist travel, everywhere you could go. Oh no, you need to get them to spend 3,000 on an airline ticket. You can't have electric and just like free using the Earth's magnetic field spinning on dynamos. No, can't have that. Same with the money. It was supposed to be to set humanity free. Now it's going to be to capture humanity again. Governments will be able to identify everybody who buys or sells Bitcoin because it'll primarily be issued on the big vaulters, i.e. MicroStrategy, becoming like a Bitcoin bank, Slam. Every company that owns more than like 100,000 will be a Bitcoin bank. But they're going to do all the KYC for the government. They're absolutely going to tax you, especially if you take that and you put it on some sort of platform that will allow you interest bearing to keep a network running, or I don't know how the form or the fashion it'll be, but for sure there's something like that's why all the legislation's coming out. You'll be able to take loans of stable coins off that when you deposit your Bitcoin at a certain percentage. But that legislation needs to be in place so you don't get burned by all these other lending platforms. And it'll be the capture and control of both the on-roads and off-roads, on-ramps, off-ramps of all Bitcoin. Expect major KYC. So those of you that hold Bitcoin before all this happens might want to think about a way to exit your position without going through these intermediaries. And talking about the fork, could it spin into something like this? Will it fork? That's the whole point, is moving and consolidating, controlling this much. It was never thought of that anybody could control this much Bitcoin before. But in the halls of power, strange things happen. If the above plays out, then institutions will have converted Bitcoin's currency into an asset, a virtual commodity. And then you add in all the other payment rails from the ISO 20022 tokens like XRP and Stellar Lumens, Cardano, and everything will be a tightly controlled ecosphere. And this was the concept. Money without borders, peer-to-peer payments, and peer-to-peer philanthropy is coming soon. That chapter's already passed. We're into full-on global corporate and government consolidation. That ship has sailed. Bitcoin is intended to be used for payments, not as virtual gold to be squirreled away in vaults. Shout out to Max Kaiser. Thank you also for placing those breadcrumbs for me to dive into. A result of all of the consolidation of people that I have learned from and have given me information. Thank you so much. This presentation is because of all of the information that you've fed over the years. So I hope it helps everybody out there. And again, my name is Dave Dubine from the Adapt 2030 channel, also the Civilization Cycle podcast. If you enjoyed this information, please share with your friends and family. I'll leave the PDF available below. I'll leave that link for you. You can share the video as well. It's important that we have this conversation. Like, where does this financial world take us? We're in the middle of the reset right now. So just a couple points of interest as I sign off here. One of the biggest things to make this happen is the stablecoin legislation with the Genius Act coming out of America. Once that passes, that will be the bedrock and foundation for liquidity pouring into these markets. The exit points and also these financialized, derivatized products will also exist in that ecosystem. And with that stablecoin issuance, it will be corporate and government as well. There's going to be many layers of this stablecoin issuance where corporations will effectively mint their own coins as long as there's something behind it. So that's where the smart contracts come in with the real world asset class. So look at the RWA class of tokens and see who is running ahead with smart contract issuance that can then scale into a different layer there of then stablecoin issuance itself. Those are going to be the market leaders, and those will be implemented and used within the corporate ecosystem as well as the government ecosystem if they're not issuing straight up central bank digital currency like the EU is planning to. The stablecoin issuance, as long as there is a physical product behind it, they are going to value that and give a sign of value of X commodity, X land, X machinery, X product, whatever that is, and that will have a total value in the pot. And that will be the amount that a company will be able to issue its own stablecoins against. Now, banks are a different animal. They're always changing. But more fixed type of mining companies, precious metals mining, sort of refiners, fabricators, lumber mills, these sort of things, they're going to be able to issue as well. Once that happens, what we understand is issued treasuries in the old way. Bank of Japan's failing. They're just all-time skyrocketing rates. We're at the cusp of something different here. So once stablecoin legislation is passed, we have entered into the new financial system. And the Bitcoinization of the world will also begin in tandem. Because the amount of liquidity flowing into that is just going to be absurd. Now, again, the only thing I don't understand how they're going to wipe out the debt on that with the issuance of new stablecoins based on real world, physical things. But these are all layers moving in, and then all those payment rails from the new ISO tokens, the approved. Hashgraph's one of them, Quant's another, like say XRP, who else in there? Cardano, Stellar Lumens, IOTA. And voila, we're into a new world. Are you going to own anything and be happy? I don't know. Is your house going to be digitized and sold off as a financialized product to another country that will hold it in its sovereign wealth fund? And maybe they'll decide to sell it and convert it into Bitcoin, and then what? People come to take your house? These are the types of things that need to be worked through. That's why we need to have this conversation. So please share with your friend and family. I appreciate you watching. See you next time. Bye for now.